Are you suffering with trend identification in the market? If you are, stick around to the end of this video, because in this video I'll be showing you how to identify trends in the market, how to identify market flow and where the market is heading. So we'll start with a demonstration on the chart, right? So let's take a look at the charts. And if you have any comments along the way or any questions, leave it in the comment sections. I will answer. And if you have any doubt, right, you can get to me. You can get to me. I will leave the link to my Telegram group. From the Telegram group now, you can have the contact, my contact, and get to me directly. I'll answer all your questions. So let's take a look at the charts. Okay. So let's take, for example, what we have is we have an uptrend, right? We have this type of uptrend. And what we have at this level, what will happen here is at this level, many people will mark this as a break of structure, and it's break of structure, and as a break of structure, and a break of structure. So what you should understand first in smart money concept is not only retail traders are considered as liquidity. Smart money traders are liquidity. If you don't know what they are doing in the market, you are liquidity. Most of the smart money traders are even liquidity more than the retail traders, because some of the retail traders understand the concept of liquidity more than you do, and they end up avoiding the liquidity while you end up trying to avoid what the retail traders are doing, and you end up being the liquidity. So now let's take a look at this. Let's take a look at this, right? If you mark this as your break of structure without this taking out inducement before breaking this structure, you are definitely the liquidity. If you don't consider inducement while you're marking your structure, you will be the inducement. Mark this as a break of structure. If you mark this as a break of structure and this as your higher low without the price taking out an inducement here before breaking this structure, this will be the inducement, and you will end up being the inducement. Now, why is this not a break of structure? This did not take out any inducement here. This has not taken out any inducement or any form of liquidity. So if you mark this as a break of structure, you're in the inducement. This will be the valid break of structure here. Why? It took out this inducement here. Those smart money traders that thought they were avoiding retail liquidity or whatsoever and bought here, they'll end up being the liquidity for the true SMC traders who will enter here after taking out this liquidity. And this will be a valid break of structure. And now when price will be returning, when price creates another level here, breaks above, many people will still mark this as a break of structure. While that is not a break of structure, it has not taken out inducement. So now when price is returning, many people will be looking for buy here. And normally, what normally tends to happen is when price taps into this zone here, when price taps into this zone here, right, price doesn't just rally down. It doesn't just rally down. What price does is it taps into these zones, gives a small reaction, and the people think that no, we are killing the market. They add more positions, and boom, price goes below and taps into the other block or into the resupply before finally it pushes up. And these people here are like, oh God, I just lost big and I did everything right. But you did not do inducement right, and you ended up being the inducement. So how do you avoid getting trapped here? The only thing you need to do is identify your inducement. Identify your inducement. Identify your inducement and their valid break of structures. Then you have the market 70% of the time right. Yes. This is the secret behind all the other strategies that they're teaching you, all the other SMT strategies. This is the secret behind it. So now I will show you something in trend line, right? I'll show you how why the trend line strategy mostly doesn't work most of the time. So now you have a market that is trending up like this, right? It's creating lower lows, lower highs, lower lows, lower highs. And you draw a trend line like this. This is your trend line, right? What you tend to see is the market sometimes will just do this. You think that it has broken out and it continues with its normal trending and does that again. You think it has broken out, you are there looking for a sell and it continues like that. So this is the reason why the trend line fails a lot, because it's very subjective. There are many ways that you can draw a trend line. Somebody will come here, right, draw the trend line like this, while another person will draw his own like this. Another person will come and draw his own like this. All the trend lines, so long as they have three touches, they are correct. They are correct, right? Now, this person draw his own like this. He is expecting this to be the third touch. He buys here, market just this person draws his own like this. He's expecting the market to come and bounce somewhere around here. The market just reaches here and continues up. Now, they don't understand the concept of inducement. This inducement, do you know why the market tapped below here and continued up? Because this was our level of inducement. There was no valid break of structure here. This is the level of inducement. So market took out the inducement and continued. Same thing here. Market took out the inducement here and continued. So if you learn how to mark structure with your naked eyes, if you learn how to mark structure manually without using this trend line, you will be above the people that use trend line because of this simple example here. This simple example here. So make sure you study this, you back test, right? And if you are new to this channel, subscribe, leave a comment and like the video. You can also share for somebody that's struggling to get to this. So I'll be going into the chat to show you simple examples for you to better understand what I mean, right? Okay, from what is happening here, right, I can show you the example I just mentioned of a trend line being very subjective. Let's say, for example, this is our first touch here, and you're a trend line trader. You draw. This is your second touch here, right? This is your third touch here. This is your third touch here, and your market continues, right? So basically, what you are looking for is you are looking for an entry right here. You are looking for an entry here, right? You saw the market came down and boom, did not break below this structure, just wicked above. When you wicked above, continue down. You thought no, maybe this market has broken above the trend line. Let me buy here. You see how the market reacted here with this small white candlestick and continues down, breaking structure. Why did this happen? This happened because you were not wary of inducement. You were not wary of inducement. And the very thing happened here again. Market did the very thing, broke above and continue. Think about it. How many stop loss would you have gotten here? How many? As a retail trader, how many stop loss would you have hit there? I'm not saying that some SMC traders will not hit stop loss also, right? But learn this. Many SMC traders end up being used as liquidity because they don't understand the concept of this inducement. Now, look at this. Look at these positions which I took here. Look at these positions. I made these are three positions, right? I hit take profit for two of the positions. This one came around. This was around 1:5. I made around 1:3.5 from here, and still the market continued and I was still making money from it. Now, from a trend line trader now, from here, you will not know what to trade. But now, using this simple concept that I'm teaching you now, you'll be able to make a lot of trades. You'll be able to get a lot of trades. For example, let's look at this. let's look at this, right? Let's start our structure from here. You can clearly see that the market was going down. Now, this was our level of inducement at this point. This was our level of inducement. When this level of inducement got taken out here, what happened? Price rallied down, creating these pullbacks, this pullback, this last pullback before finally breaking the structure and closing below with candlestick, right? Now, after closing below with this candlestick, where was our lower low? This is our lower low here, and this is our lower high here. So this lower high here is protected, right? This lower high here is protected. Price will not go above this lower high. Now, what were we waiting for? We're waiting for price to pull back, take out the first inducement before we can start looking for a sell. And what happened here is when price pulled back, took out this first level of inducement here, right? We looked for a point of interest in a smaller time frame here, and we saw when price rallied down below, when price rallied down and failed to break this low, we took out some partials, right? And price pushed above this zone. When it pushed above this zone, what happened? The price just wicked above the zone, creating a single candlestick on that block. So that is how we came about this entry here. So we all know that for a breakout structure to be valid, price must close above with a candlestick. And if you are a good smart money trader, what you can notice from here is if price is fully up here, you can notice that price, when price pulls above that zone, you can wait for the price to close. If you are monitoring this trade manually, you can wait for price to close before you conclude that this is a CHOCH. And for me here, price never closed above, so I was monitoring this price, though I took partial somewhere around here and I got hit at break BE here, but I was monitoring this trade as it was coming back up. So I immediately identified that this was just an engineered liquidity sweep here. So I just took another trade, entered and targeted just a 1:7. I never wanted to be targeting right down here because it was a quick scalp, right? And I got this trade. I got this trade. When this happened, market broke below here. This was a valid break of structure here. And before market broke the structure, it created inducement here. And what are we waiting for again? We wait for the inducement to be taken out. Then we look for a valid point of interest, which was formed after this liquidity sweep here. This was our valid point of interest. This point of interest was, this is a high probability, at least 80%. We sold, we targeted this low here, and we gathered a 1:18. Very simple as that. Now, fast forward to here. What we have here is this is not a valid break of structure, right? This is not a valid break of structure. Why? Because price is still inside this. Price is still inside this. The break of structure, if the break of structure is to occur, it should be here after taking out the inducement. So now fast forward to this. Fast forward to this. What they have here is our level of inducement here, right? You can see that this candle is higher than this one. Now, price took out the level of inducement, and this was our lower high, here. Then price pushed down, creating this last level of inducement. When the last level of inducement was taken out, we looked for a sell here, right? We look for a point of interest up here. And the wick of this candle was our point of interest in a smaller time frame. We ended up selling and targeting this low. We hit our take profit. We hit our take profit here, and then price created this inducement here, and we waited for price to take it out, then we sell again. After price took out the inducement, we sold here, and we hit our stop loss. Because this was a decisional POI, and we ended up selling somewhere around here again at our extreme POI, which is high probability. What price did is price dropped below and failed to give us a smaller time change of character and continued up breaking us at break even here. So when this happened now, we had our CHOCH here. So This is how you can continue marking your structure manually and you have a very successful win rate, right? So take into consideration that trend lines, when you are drawing trend lines, and if you don't know structure, if you cannot mark your structure, you cannot identify investment, or if you cannot avoid liquidity, even if you're a smart money trader, you will get liquidated. 95% of the time, you will get liquidated. Our strategies are not that bad. After trading for 4 years, what I can conclude, and what I can tell you is the strategy you're using is not bad. It's the way you're using it and some things that you have not yet discovered in that strategy that is bad. When I started out trading, I first started with indicators, right? I can say that's the whole strategy, to be frank. After that, I switched to support and resistance. It was great until I started noticing some flaws. So I decided to switch to trend line until I noticed that the trend line was subjective. Trend line was very subjective in some instances, like this here, right? You will draw your trend line like this. People will be gradually looking here for sell. According to many people, they will know that no, this is already a sell here. This is already a confirmed sell here for them. This is already this analysis already hits the point for them. Now, you know what an SMC trader will see here. Let me show you what an SMC trader will see here. Right? An SMC trader will see this as inducement here and this as a break of structure and this as a break of structure. Now, this will be his level of inducement taken out and this will be his higher low here. This will be his higher low here. And now he will have this inducement before his point of interest. He will have this inducement here before this his point of interest, and he will be looking for a buy here. He'll be looking for a buy here, right? This is how his position will look like. With the 1:7. The 1:7. Now the trend line trader, after drawing this, okay, this zone here as his sell zone. And what he targets is he'll be targeting somewhere right down here. With the bigger stop loss, he'll be targeting maybe somewhere around here. What do you think will happen here? As you are viewing this, what do you think will happen here? Leave an answer in the comment section and I will make a follow-up video next week to show you what happens here. And what happens is another trend line trader, right? Another trend line trader will draw his trend line like this. Okay, that's almost the very thing. Another trend line trader draws his trend line, right? He passes through this point and passes through this point. This is how he passes. He says no, this is manipulation here, and this is the first touch, this is the second touch here, and he buys. It's very subjective. Trend line trading is very subjective. Learn how to mark structure manually and you will be very anyway guys, thank you for watching. Please subscribe, leave a comment, and God bless you all. Learn how to mark structure manually and you'll be very satisfied the way your trades play out.